Well, starting a new business venture is always exciting, but once the novelty of the idea has worn off, the harsh reality sets in. If you're serious about building an asset of value, then you need to set up your business correctly up front. Let's get it right the first time, and you can save yourself a world of pain down the line. With us at the desk to delve into how to start up a business correctly from the start, Xolani Meva, National Business Development Manager at Business Partners. Thank you so much for joining us. Before I start off with you, Xolani, I think, Mark, you've got a story about how not to do it.
Yeah, well, I'm the world's biggest optimist, and one of the biggest lessons I ever learned from starting a business is don't start a business. And
don't be an entrepreneur, bottom line. No, I'm joking.
Look, I think it's I think we often, we all get excited about starting a business. There's nothing more satisfying like that sort of like honeymoon phase where you say, I'm now self-employed, and then the money starts to slowly run out. But I think that genuinely people get themselves into a lot of trouble when they start a business. I mean, in my case, we blew up a business quite spectacularly. It took us 5 years to essentially undo the damage.
What was this business? Or do we not talk about it?
We did publishing, we did internet publishing and that kind of thing, and it was a husband and wife setup, so there was a lot of the emotional and relationship set up in there. But essentially, it poured a lot of capital into this business and couldn't get it off the ground, burned through all the money, and still down the line, you've now incurred a whole lot of, you've essentially fallen over, and you owe all these people money for the things that you've gotten wrong. And I think one of the number one lessons we took out of that was there's a difference between starting a business, as in me, and starting a real business where you've got where you can actually protect your assets. And I think that it starts off as like a nice idea, and you start putting in some money. And when a business goes broke, it's one thing. When it's you who's going broke at the same time, there's a huge separation issue. And so that's looking at it from the negative side. Now imagine the business had taken off and you weren't set up properly, and somebody now wants your partners involved decide, well, I'm owed half of it and you're owed half of it, or we're not sure what the shares are. And there's a whole lot of different scenarios that come in there. And I think if you get it right properly up front, you can save yourself a lot of the pain that comes in down the line.
Xolani, let's start at the beginning for an entrepreneur. So quickly, what are the biggest mistakes?
Often it's about the idea that has not been properly investigated. That's the starting point. It may be a brilliant idea right from the onset, but the question is, do you have what it takes to take that idea into a fantastic business? Pretty much sometimes people just think it's a brilliant idea, they run with it. However, sometimes it may look brilliant at the beginning. However, as you do your viability analysis and your due diligence analysis, you may actually find that you ought not to go ahead with it. But sometimes people are so attached to the idea, they go ahead anyway and hope for and wish for luck. So, however, what they ought to be doing then, if it's not going to work, cut it off and work. Because sometimes that, whether you're ready for it or not, sometimes can be a function of knowledge and the passion that you have for the industry, or it can be a function of the financial resources required for you to enter into that business. For instance, if you see a stretch of road, 600 kilometers, there's no filling station, you think, let me open one. However, do you have the millions that it requires to make a successful filling station? While the idea itself remains a good idea, it may not be viable because of your financial standing. So it's things like those that people need to look at.
Jessica, it just seems like you need to spend more time than you think is necessary in this pre-feasibility stage if you're going to use jargon.
Absolutely.
Exactly. I think enthusiasm often drowns out the practicalities of starting a business. And there are a couple things you need to look at. So first of all, have a written plan. So you put your ideas down on paper, and then you need to look at a couple of specifics. So how are you going to make money? What is your revenue model? Google, even though it's this multi-billion company we know today, multi-million, they had to spend months working out how to make money from their idea. So it may need a couple of months. It may not be an automatic answer. So that's an important one. And you also need to create intellectual property. It's often the biggest element for potential investors and VCs in deciding whether to fund your business. Is there something you can patent or trademark? So you need to create something of value.
There's that barrier to entry they always talk about.
Yes, there is a barrier to entry, but I think there are more funds available for startups than people realize. The VCs just don't get enough ideas that are properly presented and well thought out enough.
Is that the problem, do you think? Because people don't come with an idea that's able to go to market. They haven't spent enough time in looking at the commercial viability of it, basically.
But sometimes they tend to wait too much on the idea, trying to raise this funding that we're speaking about of patenting the idea. However, in fact, people heard sometimes that somewhere you must protect your idea, but they become so protective of the idea that they don't even find that one person to tell them that it's not patentable. Because sometimes it's a business that you can make money out of. However, there's no novelty in it that you just need to go into business and fight for your share of the market.
Yeah, maybe I'll jump in there as well, because I think one of the things that pre this gig I did a bit of fundraising for small businesses, and one of the things that always I find interesting was you'd sit down with an entrepreneur and he would say to you, I want to raise 2 million rand, or I need 2 million rand to start my business. And you say, okay, that's great, but what are you going to do with the 2 million? And you say, okay, now if you, instead of taking the 2 million, imagine putting a 2 million rand Porsche in your, going and borrowing money to put a 2 million rand Porsche in your driveway, and you can imagine the installments that are going off there. You know, you wouldn't be taking that money, you wouldn't be asking for that money if you were converting it to the equivalent of a car. And you've got to work out your cash flow side of it. And the moment you raise that money, you're liable to somebody. And I think that, you know, getting the structures right and not overcommitting yourself, you know, take it in stages, build up something. Make sure you've got real cash flow, because at the end of the day, cash is king.
Don't go all out. Don't go, you know, buy a whole factory, have it running at full capacity, basically. You know, start it in stages.
If you don't have the cash flow coming in, there's nothing you can do. There's nothing. You know, often the first thing that an entrepreneur does is they get business cards, they get a website, they get corporate stationery, and you know, suddenly that money's gone, and you think, well, that was 20,000 rand that could have been, that didn't have to be spent at the time. Rather, just building. You could have done far better using that money to go and sit down with a supplier and say, well, I actually need the better rates for this, or I need a real customer to get myself going.
Should you be seeking out advisors then?
You should, actually. In fact, marketed on the note, many people who come to us, we often have to tone them down in terms of the financial requirements that they have. They want to open a 12 million rands business right from the onset, when they hardly had money to come to our offices to start with. So a lot of business ideas is true. Don't require that much capital to start with. Some have been started without any money by various people. So I think there is a degree of education, because a lot of people will complain that I didn't get the funding, I didn't get the funding, I didn't get the funding, when in fact you realize that they don't even need your funding to actually start into business. So with consultation, therefore we do a lot of directing them and giving them a proper perspective on how they can get into business.
I think what's important to also keep in mind is that investors fund people, they don't fund ideas. So if you're an entrepreneur on your own and you don't perhaps have the business experience in a certain industry, or you don't have experience running a business, partner with somebody who does, because that can attract investors and help you just run the business side of things, bring in that administrative experience. And the second thing is, entrepreneurs often don't pay enough attention to marketing. They think their idea is so great that it's just going to spread like wildfire, and they perhaps hire a sales manager or a sales team before they hire a marketing specialist. So even if you hire a marketer on contract at the beginning, it's very important to get your idea out and to let people know what you're doing before you hire other members of your team.
And I think a first customer that is there, that is probably your biggest asset, is having a real customer. I mean, you know, you can use Discovery as an example. I mean, it was an idea and it was fun. It had one customer to start with. And that customer essentially was gave it the cash flow to get going. But it created this idea that I'm really in business. You're not in business when you have a business card and a website. That's not business. You're in business when you've got a customer who's prepared to pay you for your services.
Talk to us a little bit more about the value of growing this customer base.
It's absolutely important. For instance, we speak of businesses that could be started with less or little capital. It just means that those people must be strong with marketing, because that's what many people do. They go, they create a market, they say, listen here, this is what I'm bringing onto the market. Are you keen? Are you keen? Are you keen? So whilst they may not have other strengths in terms of financial strengths, etc., those people who are often good on marketing can grow their businesses, because marketers are often good with negotiation as well. They can get the customers to pay up big deposits for the product even before it's supplied. So at the end of the day, you find that those people don't even need funding from people like ourselves as financiers, because the customer itself has already financed the businesses. So customers are key. Without customers, you may have a fantastic product, but or service, you just don't have a business.
No one to sell it to.
Absolutely.